We're going live, guys. Welcome. You just entered the trading pit, your home for sophisticated takes on the crypto markets. It's March 28th, and here in the studio is JJ and Benjamin of J Labs. I am your host, Marconi White. As Bitcoin continues to flirt with its all-time high, all eyes are turning towards the upcoming protocols as well as the halving. We're going to get into that. But first, it's rapid fire, where I look for simple answers to complex questions. Gentlemen, I hope you've got your guns ready to fire. All right, Benjamin, first question. How many years will SBF get in sentencing? Less than 20, 20 to 30, or 30 plus?
Less than 20.
Less than 20. Man, you have no faith at all in the judicial system. I think they should throw him away somewhere in Alcatraz, take away the key.
No, I don't have faith in the American judicial system. That's it.
Well, I'm not sure where you're going. Maybe Russia. We've seen how they treat them there. All right, JJ, who wins the ETH ETF battle? BlackRock, Fidelity, or a crypto native?
Rich get richer. BlackRock.
Oh, I think if anything, you're going to have a BlackRock tattoo by the end of all this. You're going to get that BlackRock maxi. You know,
I'll be working for BlackRock, selling the ETFs. Yep.
Yeah, that's right. All right, Benjamin, who will have the best meme coins? Base, Solana, or something else?
Base.
Wow. The rapid fire out of you, man. It's like a Tommy gun from the day. All right, Base is going to come out. I'm going to ask you some more questions about that. We're going to get into Base in a moment. JJ, alt season rallies, bigger, smaller, or the same as the previous cycles?
Bigger, much bigger.
Oh, and you know what people are going to ask in the comments? How much bigger? They're going to want you to size it up. So be prepared for that follow-up question. All right, Benjamin, last one we got here. BlackRock's tokenized fund garners $160 million in flows in a week. Is this bullish or just hype?
It's bullish.
It's bullish. Okay. There's the rapid Benjamin coming out. All right, guys. Well, welcome to everybody. Glad to have you here. We're going to dive in. I do want to ask these guys a couple of questions about pre-halving. I want to ask them about Bitcoin's price action, definitely as we go into the this week's expiry. There's a lot to unpack here, but first I want to talk a little bit about a topic that's getting a lot of traction, which is Base. And there was an article on Unchained. It talked about how Base is experiencing a TVL explosion of 130%. And obviously, much of that has to do with the meme frenzy, which is Toshi and Degen, which have absolutely caught fire. But I did look up at some of the data on DeFi Llama, and 50% of the TVL is coming in from DeFi protocols. And the ones I had here were Aerodrome, Uniswap, Extra Finance, and Compound. So, Benjamin, I want to get your take on how realistic is it to see Base really capture some ground this cycle?
So, since July, from the time Base launched, they have totally done 192 million in fees. That's the revenue that they've generated. Okay. Now, I remember seeing the Coinbase 2023 revenue was $3.1 billion. So, and we are in the bull run here, right? Now, Coinbase, whether directly or indirectly, or external third parties, whoever it could be, they have all the incentives to get Base up and going and, do fantastically well. Go and line up over there, because the public perception still is that if you are able to list in Base and trade over there, then you have chances to get listed in Coinbase. Whether it's true or not does not matter. It does not matter to the retail public. They don't care about logic. The second perspective is that by using Base, your fees are still lesser and you have a shot at competing with Solana. And Base is introducing the smart wallets next month, which is a big deal. That will reduce a lot of cost and make it easier for a lot of dApps to use Base as a primary layer for onboarding clients. That's a huge deal. Now, and Coinbase has said that they will not airdrop Base. There won't be a token called Base token, but that doesn't stop retail from, sniping the shit out in Base layer so that they can get airdrops in future if Coinbase decides to go that route. Now, Coinbase does not need to do a token at all. They can just, keep this FOMO going, and basically base layer becomes one of the most revenue generating layers. And it is possible that 2024 revenue for Coinbase, half of it comes from base layer.
So from that perspective, there's kind of 2 points I want to point out. The base layer allows Coinbase to have a new revenue stream that could shield them a little bit from listing coins themselves from an SEC standpoint, some of the scrutiny they may have from regulators. So that's a positive. Obviously, then you have this revenue side of it, which is very lucrative. As you just pointed out, it could be 50% or more for them. And the narrative side of it, which is really what I wanted to get to when I asked the initial question, how far can this go? Is extremely juicy, right? As you said, for retail, which I think you have about as much confidence in retail as you do for the U.S. judicial system. But the for that perspective, just to highlight what you said, if you think that this could be a pathway to getting a token onto Coinbase, you think Base is good. If you think it's cheaper and faster than Solana, you think it's good. And then if you're thinking maybe there's a chance, even if Coinbase is saying there is no coin, you think this is good. So there's a series of things that are kind of lining up to really help with Base. What do you think there's other assets that Coinbase has just from a marketing and a financial structure perspective that would allow them to push Base to really compete with Solana?
So Base, how it competes with Solana, in my perspective, is that, look, Solana is still not an EVM chain, and you have a different architecture, you have a different language to write and produce things. The nodes are expensive to run. Whereas EVM, Ethereum side, all of that infrastructure already exists. The only big headache Ethereum ecosystem has had is the fees, is the gas fees problem. And these layer 2s have been reducing that, and Denken upgrade is apparently reducing that to a certain extent. And Base, being built on top of Optimism stack, is definitely far cheaper, almost zero in some of the wallets who are interacting. So lack of gas fees or very low gas fees is one of the reasons why Solana was doing well as well. So that's why a lot of degenerate volume was sitting there. Now, a real competition to Solana meme coins, there is only one option, because you need it on Ethereum. And on Ethereum, you cannot go on the mainnet because it will just blow up your cost. So you have to go for L2s, and where else would you go to? If Arbitrum is the DeFi layer for Ethereum on the L2 side, then base layer on top of Optimism is the degenerate side, I would say.
Okay. So if you're out there and you're listening to this and you're asking yourself, why is Base getting so much attention? I think the case for that was just laid out by Benjamin. And certainly, I think when we get into positioning, I'm going to be asking some questions about meme coins. But as we start to go into halving, I'm going to be talking a little bit about Base versus Solana. So be prepared for that question. JJ, I want to take this conversation in a different direction, because right now we're up against the wall on the expiries, which are happening tomorrow, and I think even on Saturday. And there was an article that came out from that was on the block noting Bitcoin open interest for March expiry hits record levels, with 9.5 billion worth of Bitcoin option contracts expiring this week. And the max pain point, when I looked just this morning, was 51,000. So JJ, when you look at this structure, we see that Bitcoin has been trading near, as I said, it's kind of flirting with the 70K level. What are you seeing from a structure perspective, and how are you expecting this to play out over the next couple of days going into April?
Yeah, it's been interesting, right? So we had the options that expired last week. There was a ton of calls that got burned, and we put out an article on this. Basically, every call that was out of the money, or most of the calls in general for that expiration, expired worthless. And it seemed like there was a window of opportunity of weakness there, where it could potentially fall back towards that 50K mark. But the ETF inflows have just been too resilient, so price never really fell towards that max pain point. It just regained momentum. And now it's kind of stalling at the 70K level, which isn't a coincidence. We see this is the spot where dealers are max short gamma. So basically, this is the spot where they have to hedge their positions. And the way they do that is by getting long exposure through derivatives or otherwise. So that kind of creates this like balance in the market for now. But as these positions unwind tonight, it'll open up a window of opportunity for increased volatility as those positions roll off. And if we look at the implied volatility index, we see that peaked about 2 weeks ago when Bitcoin made that run up to 74K. And it's been consolidating just like Bitcoin since. So we've kind of been in this 65 to 70K range or so. And I think that range is primed to break over the next week or two as these options roll off and price can kind of find an unbuoyed level where it can just kind of run in either direction based on what the spot does. So we'll have to see. I think yesterday there was about over 250,000 of ETF inflows. If that keeps up, I think it's this clears open the path towards 80K if those can sustain after these options roll off. Likewise, if they falter, that could open the gate towards new lows below 60K. But I think this is a sign that increased volatility should be coming here in the next week or two.
So, JJ, I want to ask, you talked about increased volatility. We are just a month away, roughly. I think April 20th right now is the scheduling for the halving. Typically, there's volatility that precedes the halving. How do you think that this current activity is playing out relative to those historic patterns? Is it really more the ETF flows and perhaps the hedging from that's really going to drive activity now? Or is there some historic kind of muscle memory that's going to play into how people play the halving?
I think the market's gotten smarter. So typically we wouldn't see these large run-ups to all-time highs until after the halving. But this time around, you have BlackRock's salesman out there telling you, hey, when halving gets here, price is going to go 2x, 3x, etc. You want to get in now before the halving happens, and we see that priced in early. So the market's adapted. It's studied these things, and it's gotten ahead of it this time. So it's going to be interesting to play out. Like, does the halving now become a sell the news event where we see kind of a drop in consolidation after there's an immediate follow-through? The halving is an adjustment to supply and demand. And naturally, that's going to take a lot of time to find its way into the markets, like when those forces actually come into play. So now you have a lot of speculators front running it. So do they sell ahead of the halving? And that kind of leads us into a consolidation break, or does this thing just rip up forever? It'll be interesting to see.
Yeah, and I guess a third option is that we're really waiting for these external forces like the DXY changes in how the Fed is looking at their interest rates. Perhaps those are going to have a bigger play than really the halving does. This could be the last halving cycle that we really care about the reduction in supply.
Yeah, that's true. It's also like the people that are buying the ETFs now, like they don't care about the DXY. We saw that yesterday, right? DXY was charging high, and we still had over $250 million of inflows. So you have to be nimble, and you can't marry your ideas to the market. Like, I think when DXY goes up, it should be bearish for Bitcoin, but if the rest of the market doesn't believe it, who am I to say, right? Like, you have to follow the flows.
Follow the flows, just like we were talking about before. Follow what you see, not what you want to see, right?
We also saw in 2021 where DXY and Bitcoin went up together throughout the second half of 2021. Ultimately, we all know how that ended, but there was still a 6-month window where you could have made over 2x on Bitcoin while DXY was going up. So be aware of those things. The market's never in a static state, right? The correlations you follow can always change.
Absolutely. All right. Well, I do want to ask a little bit about that rollover, Benjamin. I want to ask you a little bit about the CME and that rollover. Before I do, I want to say welcome to Light Signatures, KSJB, Aditya, David, Gabriel, Tyke G-Man, 251 Legacy, Hello World, JV, David. Welcome, everybody. So happy to see you. Definitely hit the like and subscribe button. Share this with whomever you want to have a deeper conversation with on crypto. Hopefully this triggers some ideas so you guys can cover for your own portfolios and just questions that you may have. I see a couple of questions coming out asking whether or not to play or stay through the long weekend. Also a question on how to capitalize on base hype. Guys, we're going to try and get to those questions as we get in later into the show. Benjamin, I want to come back to you though, because JJ was talking about how volatility looks like it's coming down. It's consolidated a little bit. We talked before with you about the idea that the CME rollover, which would be happening going into next week, could create some turbulence. Is it going to be enough turbulence to really drive price up or down, to really change that volatility? That's what I want to hear from you. What are you expecting for this very first quarter rollover from TradFI specific to the CME?
It's hard to say what volatility it will cause, but we should see definitely some action. And I think a lot of anticipation about that volatility is happening in the order books as such. That's why we do not see a Coinbase spot premium right now, despite all these inflows that we are seeing on the ETF side. We do not have a Coinbase spot premium, number one. Number two, funding rates have spiked up in the past few days. There was quite significant increase in open interest as well. So there's a lot of speculative activity happening right here between 69K and 71K in this specific zone for the past few days. I think the market is anticipating some volatility move, even though nobody's sure which direction it's going to go to. There's a lot of futures driven positioning. And I think it's a lot based on this rollover, that activity that's going to happen on the CME side. So the market is anticipating, they're just not sure which way to go about. So we have to wait and see.
Place your bets.
Yeah. So just to put some numbers there, I was looking this morning. I saw open interest is sitting about 20.3 billion, and the long to short ratio is 59 to 40%, roughly 60-40. So you just said that the market is kind of anticipating something. Oftentimes we see a rush from specifically on the crypto side to be on one side of that bet over another. Is it more the case that right now we're actually seeing people being more sophisticated hedgers, or are they really trying to front run that action?
No, I think a lot of people are longing here. I don't think people are hedging here, at least not on the native crypto trading. A lot of people are definitely longing here, and I think we are seeing that impact, the funding rate spreads and so on. So it is possible that the cleanse is still pending. We had Pablo alerts as well, so that is also pending. So I don't think it's the right spot to get into leverage positions.
I think a lot of that, the open interest increase we saw this week can be owed to options hedgers as well. We point this out on Tuesday.
Possible.
So as price went past their gamma levels, they had to add long exposure. So naturally, the way to do that is you add long perps. But then as those contracts roll off tonight, they're going to close those positions. So we'll probably see a wipeout in open interest one way or the other here over the course of the next day or so as those options expire.
Okay. So
and that can be a good entry, to be honest.
Mm-hmm. Yeah. Definitely an interesting signal. So to be looking at both of those to see if really that's where those people have hedged those positions, if they do close that out. I want to ask you, JJ, what about going into the halving? We talked before, the market is perhaps getting a little bit more sophisticated. Everyone's wondering about the trade for the halving. I mean, even on this show, we've talked so many times about expecting a pullback that hasn't yet happened. I mean, I think the deepest we've gone is really high 58s, 59,000, maybe low 60K. And that was just completely bought up in a matter of hours, really. We haven't really seen much of a pullback, definitely nothing on the 20% side. So as you look at that, as you look at options positioning and you look at open interest, right now we're talking about just over the next 7 days, really through the long weekend. What about going into the halving? How do you think people, do you see any indications from the market that they're starting to prepare for that? You talked a little bit about a sell the news event, but what about if I look at specific to options happening that are expiring right around the halving? Is there any indication there?
There hasn't been much new flows to there. So if we look at the April 26th expiry, it's been mostly puts coming in the past few days. Nothing crazy. It's just, let's see, March 25th, we were at like 21,000 open interest in puts, and now we're at about 26. So that's been a nice spike in actually short open interest for that. And then it seems like May is getting a little bit more call interest, but not much. Over the past few days, we've gone up about 600 or so calls added to the May expiry. So there's not any huge rush to get into new positions here. Obviously, prices extended. I think if you saw a pullback towards the 60K, 50K level, then you might see some people rushing into options position there. But with premiums as high as they are now for calls, it seems like the market's not in too much of a rush to be betting more into the halving. I think people are pretty comfortable just riding it out in spot for now. If anything, it looks like they're hedging exposure into the next month just because it's unknown, right? Nobody knows how this next few weeks are going to play out as these things roll over.
Absolutely. Benjamin, I want to ask you the same question. Any perspective on the pre-trade, post-trade for the halving?
I still expect a wipeout, which we'll be able to buy up. Irrespective of the maturity of the market, I feel there is always a degenerate play that comes in as we get closer to the date and time. I don't think it will be a fully non-event. I don't think we'll get like some 30-40% drop on the time of the event. But certainly, I do think the 24 hours pre and post will have volatility that is worth trading.
Well, I want to, I guess, dive into that a little bit more. So it almost sounds a little bit, I'm not sure if it's data driven or more intuition that's basically saying I'm expecting that to pull back because we haven't yet seen that. What would invalidate that? I mean, we've talked about the ETF flows, stay long until you're wrong. Those have remained strong outside of last week, which driven by GBTC saw net outflows. We continue to see fairly high inflows both at BlackRock and Fidelity. I think if I pull up the numbers there, let me see if I can do that quickly. You know, they're averaging anywhere between 140 and 260 million on a day. And the average for inflows continues to be about 225 million. So is that what you're looking to change? If the flows really change, is that where you would, if those stay strong, I guess, does that invalidate this wipeout scenario? Or are you looking at other indicators?
I think flows have stayed strong, apart from the 2-3 days closer to FOMC, wherein we had weakness. If you look at the past 1 week price action as well, price has been kind of going sideways, while ETF flows have been a little bit consistent. It's been consistently more than 100 million of net flows. So I don't think the flows are dictating much of strength or weakness right now. I think it's more of prices trying to find a footing. There is definitely some type of a hedging mechanism going on. There's definitely some spot selling going on. There is spot buying also going on. But, like if you go through the order book of most exchanges, price is capped. And there will come a time when that cap basically gets removed. And that's when this will rocket. But we don't see a Coinbase spot premium right now. So this whole price action from the 13th can still be a part of a distribution mechanism. And we consolidate and form a range between 60K and 72K and, go sideways for a couple of months. We just had a massive rally from December, right? It's all right if we get 1 month of consolidation in a tight zone where people are just aping into leverage. And based on what is happening with the native OI, when we see the funding rate, it does seem there is still a lot of demand for the cash and carry business, and that's why everything stays elevated. So
the CME annualized.
I still think there will be a dip that will come.
Yeah. All right. JJ, what were you saying about CME?
There's still like a 15% annualized basis on the CME for cash and carry, which means if you long Bitcoin spot, short CME futures on net, you'll be up about 15% per year if you annualize that. So it's still an attractive trade, which is basically risk-free as you're capped to the downside by shorting the CME. And then you have your long exposure spot.
And if you do the same, on Binance, you basically have 43% APY.
Right.
Yeah, there's a lot of juicy cash and carry trade opportunities still there.
So I'm not sure if we have this data in front of us. Where have we seen this from a bull cycle perspective? Have we seen this before, like as an indication when that starts to die off? Is it mid cycle? Is it early cycle? Is it late cycle where that trade kind of dies?
It's hard to put it in chart form. Benjamin, do you remember any of the numbers from last cycle? What those got up to for cash and carry? I know it was pretty ridiculous.
It started dying down. Yeah, it started dying down post July. I think the July 2021 rally, the second rally that happened, the SBF rally, I would call it as, he basically sparked the NFT season with 3 Arrows Capital and Solana run and all that, right? So that second rally, which came up from 30K all the way to 69K, over there, the cash and carry trade was pretty much declining, I'd say. So that is a very good comparison where cash and carry trade was declining in its motivation. It's the prior part of that cycle where we had a lot of that motivation.
Okay.
The second half, people were
I was going to say
leveraged.
It sounds like something we should keep an eye on, just as perhaps yet another signal to where that we may start to see some shakeout in the market or a change in the regime of the market, right? when that trade starts to decline and lose some of its juice.
Yep. You could see it here on
Okay.
the true open interest, like July open interest was at its peak, and then it kind of died down into that until we finally hit that peak at 69K, and then short started entering again. So I think we could see something similar here where price goes up, open interest goes down. That would be a good sign.
Okay. All right. Well, JJ, anything else, I guess, right now? I mean, I think it's all really about options and the positioning on the futures. We see those roll off and start to expire going into this week, going into tomorrow. If we start to see them close some of those positions on the derivative side, on the perp side, we kind of know that that was the trade that was playing out. And really, I guess we can see if there's some volatility going into next week. And you said maybe really the next 2 weeks.
Yeah, there will be a lot of positioning readjustment, right? And naturally that will typically bring forth volatility. So that could give you a good entry to the downside if you're still on the sidelines. So just be prepared for that. It's
okay. Well, I think then we should be talking a little bit about the outside forces, which of course is Dixie. Before I do that, I want to say welcome to everybody here. See a lot of faces. Always good to see you every Tuesday, Thursday. If you haven't already, hit the like and subscribe button. And if you are interested in getting deeper into options, definitely check out the link in the description for CoinCall. CoinCall is the place to trade options, perps, and SPA of your majors. And it is a great place to obviously get familiar with, because that is the one that JJ's highlighting in his options videos. He's currently working on the next one. It's going to be a banger. And it's definitely the place if you're going to be prepared for when this market is really starting to hit its rally point, so you can make some crazy trades. But now is the time to check that out. Okay, let's get in a little bit to the Dixie. We always talk about that as the external forces that could make a play. Looking this morning, and you and I were talking offline, JJ, Dixie was sitting about 104.54. Again, I ask you the same thing I'm asking you every time. Is it playing its cards? Is it showing us where it's going to go, break up or down?
Well, this morning it went right up to that Bollinger Band resistance here on the daily and rejected after the PCE numbers came out. So we'll see if this leads to a larger reversal. For now, it just looks like obviously you don't expect it to just blow past resistance on the first go, especially after the run up it's had in the past couple of weeks. It's due for some consolidation. So that could provide a green light. Just the fact that it's cooling down in the slightest, it could provide a green light for Bitcoin to expand here. But overall, it seems like the market's not really too concerned about a strong Dixie. So I don't know how much weight we should be putting on it right now. I think there will come a time when it matters, but it seems like right now isn't that. So just follow what the market's giving you, right? Like the market's telling you it doesn't matter, then it doesn't matter till it does. But it's something to keep in your peripheral, be aware of it, right? Like Dixie starts to go above 105. I don't expect Bitcoin strength to continue. Take that for what it's worth, but that's just my opinion on it.
Okay.
And we could also see it fall back now, right? Like we've had this large run up in the past couple of weeks. Finally got the cool inflation print the market was looking for. So maybe this is a sign that it's due for some mean reversion here. And that could provide a good catalyst for Bitcoin to make a break above the 74K region.
Okay. I feel like we talk about this every time. I'm sure listeners are going, my gosh, we always talk about the Dixie kind of waiting. I think a lot of these trends and these patterns take a while to play out. And when they do, they're violent, right? So it's almost like, it's the last 10% that you got to be paying attention to. You can't let your eye off the ball, because that's when it's going to give the signal. But the rest of the 90% time is just kind of waiting.
Exactly. And it's like we were saying on Tuesday too, like anytime you zoom in on your time frames on these things, you just invite more randomness into the equation. So it's hard to track on a day-to-day basis, but when you zoom out over the course of months, the picture becomes clear. So definitely don't want to see Dixie running this hot for too much longer than it already has.
Absolutely. All right, guys. Well, I think there is the market update. I want to spend the rest of our time talking about positioning. So much of the market feels as if it's been sort of stuck in this range-bound area. We know that we've got these catalysts coming up, and whether it be the ETH ETF denial or approval in May. Obviously, we have the Bitcoin halving coming up, just as we said, just a month ago, just a month from now. So it's the question now is how do we start positioning as we start to move into Q2? And we had a question here, a couple of them I think related to some of the topics we've already covered. One of them being around base and how to capitalize on base. And I think a different question would be, should you be trying to capitalize on base, or is that really just going to be meme fervor? How to look into options and playing this trade for the halving. I'm trying to see if I've got some other questions here that we want to cover. And then how are options looking for quarter two? And so let's kind of move into that. So Benjamin, I want to start with you. Last week you were teasing a coin. You said you were doing some research on it, obviously in the altcoin perspective. So I'm not sure if you're ready to lift up the Komodo, show us a little bit about what that token is, and talk a little bit more about that. If not, I've got some other questions for you.
So the coin I was talking about was Rollbit. It's a
Rollbit. Okay.
Yes. So the token ticker is RLB, and it already did 100x last year when it launched, and it did a huge airdrop. It's a gambling, gaming, betting, sports betting, and a 1000x crypto leverage platform, and all of that. But they have something very interesting when I was looking into the token economics, and when I was looking in. The project has a lot of allegations as well, so it's not free of any controversies. So there's a lot of controversies, and that is reflecting in the price as well. But they have something. What they have is, compared to any other gaming or gambling or betting project in crypto ecosystem, they're the only ones who have huge revenues. It is estimated that it's north of 30 million a month, which is huge. When you compare their market cap right now, which is around 250 million or 60 million, I think. They also use a large part of their revenues to buy back tokens and burn them. So what has been happening is that the token burn kept accelerating because their revenues are holding strong, and they're using those revenues to just keep on buying and burning tokens, as a result of which their market cap has been declining quite much. Because of the allegations, controversies, and the FUDs that surround the project, people have been jumping ship and going into the next competition in that ecosystem. But the next in line, the project basically does at most 2 million a month as revenue. So when you look at the revenue numbers, and that is like that's so small. That's 1/10 of what this project is doing. So purely thinking from a traditional perspective, when you look at a business which is doing crap load of revenue and its token is being undervalued, when you compare it even on a simple PE ratio basis, like you're making 30 million in monthly profits and revenue, and your equity price or the token price is basically at 250 million market cap, so that's huge undervalue situation. So the one reason why this could go to zero is if the business shuts off and does not generate any more revenues at all. That would be one reason why the project could go to zero. But if not, and if they keep accelerating this buy and burn model, and if they continue to keep generating revenues, then at one point, this inflection of price is going to happen. It's just going to shoot up like crazy.
So to summarize here on Rollbit, you've got a NSFW kind of product, right, that is generating real revenue, which is uncommon for many of these protocols in the crypto space. They're using that to do basically share buybacks, which is token buybacks, to actually reduce the amount of supply that is out there. Am I mistaken in saying that they're not listed on many major exchanges? Is that a correct?
Which is an advantage. Which is a major advantage,
right?
Because there's no perp to trade it, so there's not much shorts or not much leverage long positions which can cascade. And at any point, if they decide to get listed into these exchanges, they will definitely get a listing, because they had a lot of traders. There are a lot of holders who would be willing to come in and start hedging their positions or opening up leverages to trade the same game plan. So whenever the team decides that they are going to scale in terms of exchanges, I don't see any reason why it wouldn't get explosive. The only reason it would basically die if all the controversies surrounding the project, all of them, if they are real.
Yeah.
And so far, none of them have got a backed, like none of the FUDs basically had any backing. So there's no proof of anything so far.
Okay,
so this is a gamble play.
Yeah. So I want to position this in somebody's mind when they think about their portfolio. So you've got this interesting play. I think you've laid out the case for why this could be explosive price movements, but you got to pay for that explosive price movements with a potential devaluation, for example, if they close up shop or if there's something else that happens from a controversy standpoint. So how does somebody who's thinking about, let's say, just keep the numbers round and simple, they've got $100 that they're investing in crypto. Is this a 1% to 2% of that portfolio that you would allocate that someone could argue is a good, reasonable investment for this for their portfolio? And then I want to ask a question about entry scaling.
Yeah, I would consider it as a 1% allocation, and I would consider it written off. I wouldn't look back at it for a year and just let it play out. It does
The
not
risk is
matter.
always zero
It's
when you're going things that,
yeah,
but
yeah.
the upside, like you're risking 100% and the potential upside is, spin a wheel. It could be 10x, 100x. That's the thing, is like it's high risk, high reward type things.
Yeah, so it's really more of an expected model, expected value model of how you can kind of size this. And I think the advice here isn't really, this isn't financial advice, but we're really trying to give people the way in which they can think about how to put these positions into our portfolio that's a little bit wider. Definitely not saying, put 100% in there, because as JJ's pointed out, this is really one of those gambling, no relation to the actual token, but this is really more of a gamble or lottery ticket. Okay. So beyond that, how do you think, Benjamin, of getting into a position here? Would someone think with a token like this, with its type of behavior, is this a DCA model where you say, okay, I've got 1% of my capital, I'm going to do it over several weeks? Do you think it's more just buy it now because it's pretty close to the bottom floor, you can just buy your position and hold it? How can someone think about that?
Last week after finishing all the research and also teasing, in our podcast about it, and after doing all of the research, I purchased $10,000 worth of the token, and I considered written off to zero.
Okay.
I considered written off to zero. So for disclosure, this is personal exposure. This is not from JLabs. This is not any official recommendation or anything. It's a personal
some skin in the game, though. It's some skin in the game. Okay.
Most people who know me or met me in person would know that I'm not a gambler. And I barely touch these platforms because I don't believe people should gamble in that way. But this is crypto. And you don't go to the platform and gamble. You gamble on the gambling platform. You are betting on the betting platform. Will it work out or not? And I'm betting that it will work out.
Okay. So just to summarize here, because I do want to ask a couple of more questions. This Rollbit is the token. There is the case, as I said, that it has opportunity to get priced higher if it goes onto a higher exchange. And again, if we see the alt season. I guess last question, Benjamin, I do want to ask you, how do you think, if someone's coming across examples of these tokens that they feel have a similar kind of potential, do they buy them before or after the halving, or does the halving really not play into it? You obviously just put some skin in the game, buying some right now. So how are you thinking about that? How did the halving come into your play positioning?
For these type of low cap projects, it is impossible to determine the optimal entry, because everything could just change if one market maker in one of the decentralized exchanges decides to spin up his sniping bot and it starts triggering a lot of purchasing. So it's very difficult to time entries into a lot of these. What you could go, of course, is based on valuations. If it's fully diluted valuation, and if the market cap is looking good and fitting your budget, and you can make certain estimations how other tokens in that specific sector have done well. And then you can estimate that, well, okay, the max potential is 10x. So right now, I'm not at the optimal entry, which means I probably have a chance at 4x, which is still great, compared to putting it in your 401k. So that's a good trade. But even then, these type of extremely low cap, you can potentially do 0.5% to 1% of your portfolio. So that's the maximum allocation that you could do once this is a very speculative play.
Okay. Well, hopefully for everyone out there, you're asking about the token. I know last week people were asking about the token, saying just give it to us. Obviously, Benjamin, as you mentioned, he wants to be able to do enough due diligence to feel like, okay, I know why I'm making the play. I know why I'm making the gamble. As you mentioned, he's already written off, even though he's putting skin in the game. That is the kind of thinking that I would encourage everyone to do when you're looking at plays like this. This isn't the same as putting money into BTC, putting money into Ethereum, putting money into tokens that have been through multiple cycles and are battle tested, right? So kind of keep that in mind. Okay. So I do want to move on a little bit. There's a couple of questions coming in around Ethereum and BTC, and there's a couple of questions coming in around Base. So Benjamin, I want you to give a little bit of thought. I'm gonna transition over to JJ, talk a little bit about options and positioning, but I want you to come back in a couple of minutes and maybe give us some thoughts there, looking at those relationships, because those questions came in from the audience. I definitely want to be able to hit on that. So definitely come back and think a little bit about that. So JJ, I want to ask you. So question is, going into options, going into positioning, going into the halving, we've obviously laid the plan out. We've laid the table saying right now the market doesn't really know. It doesn't really have a position. It seems to be looking like, there's a lot of long interest right now, but that could really just be exposure from people that are, could be dealers, et cetera. We're looking for that to roll off. So I want to ask you, how do you start to think about positioning for the halving? Are you thinking about that and what to look for options? Before I do that, before you answer that question, I want to give a shout out to CoinCall, who is the sponsor for the show. If you haven't already, definitely check them out. The great exchange to start your options journey. Great place. You can trade spot, you can trade options and for futures of all the majors. And obviously, as I've said before, it is the exchange that JJ's highlighting in all of his options videos. So if this is new to you, concepts are new, it does help to kind of play around with that and be able to see exactly what JJ's doing with those videos. Definitely check out the link in the description if that is something you're interested in. You can start with a little bit playing the trades, or you can even do paper trades, as I have done in the past, which is actually literally a pen and paper. Okay, JJ, let's talk about that options trade. How are you thinking about positioning for the halving?
I think heading into the halving, you want to be long straddles. So like I said, I kind of have a long volatility bias here over the next month or so, and I'm not really sure which way it's going to break first. So the way I would express that would be longing. A straddle is when you're long a call and also long a put. So you basically have volatility exposure in both directions. And you could look at, say, anywhere between April and May for put exposure down around 60K, which would bring you to like the range lows. So you could look at put options, which are currently pretty cheap, right? So you look at 60K put expiring April 12th. Those are around $500. 62K puts around $800. That's not a whole lot of risk capital to protect your exposure to the downside. And then you want to go longer dated on the calls, I think, because I think ultimately Bitcoin's on a trajectory up. There's no doubt about that. We're in a bull market, likely headed to 100K by the end of the year. Downside of that is that a lot of that's priced in. So you're going to have to, ultimately, you'd like to get this exposure, like these 80K calls in June. They're a bit rich, right? So they're $9,500 currently. Yesterday, they're around 800 or 8,000, just to give you an idea of how quickly these numbers can change. But I do think you want some long call exposure. So you have to figure out like what risk capital you're willing to risk, and obviously have a plan if price falls lower to add to these longer dated calls in that event. But you're hedged with those puts in case we get kind of a downside break in April and into the halving. And then you want to be longer dated calls with a plan to add more. So obviously don't put all of your risk capital into this trade today and then have it lose 50% tomorrow. Just realize that these things can lose, 50% of their value overnight. And you should have a plan to buy more in that event. But I think something like that, like April 60K puts and say June 80K calls, something in that scenario where you're playing for a range break, and these things would appreciate rapidly in that event where Bitcoin finally escapes this kind of 65 to 72K range it's been chopping in recently. I also think getting into more conservative plays, I've been looking at the Bitcoin miners, and I think a lot of them are extremely undervalued relative to the move they would make if Bitcoin does break out above 80K. So you look at like Mara, for example, well below its 2023 highs, well below its highs from when Bitcoin broke above 70,000 back in February even. It's about 30% below those levels. And you could buy options on those for much cheaper than like the 80K calls we're looking at now, which are a bit richer. So that's a way to play it with like low leverage exposure, low risk exposure. That offers you a lot of upside because these things, as we know, they have a lot of short interest and they can make wild moves 20, 30, 50% in a single day, which will really give you some outsized gains on options as well.
Okay, that's a nice breakdown. I want to ask two follow-up questions there. The first is, and apologies if you already said this, are you looking at placing these trades before or after the weekend? So are you going into next week, letting some of the rollover to take place, or is it something that you could even start doing this week, kind of not necessarily knowing, right?
It depends on your risk tolerance, right? So if you want it to try, because the move could happen rapidly after these options roll off in either direction. So be prepared for that. Like price can move down to 62K tonight. And then if you buy these 80K calls now, these June 80K calls at 95,000, you could be facing a $2,000 to $3,000 loss in a matter of hours if price moves down that quickly. So be prepared for that. And ultimately, if you're getting into these positions, you say, okay, that's actually what I want because I want to buy more of these contracts at a lower price. It's not something where you stuff all of your risk capital into it in one go and then you lose 50%. You have to have a plan to kind of scale in as price moves. It's a very dynamic position, right?
Okay, so it's looking to average down the entry cost. So you're saying if you've got higher risk capital, or you've got a higher risk tolerance and you've got enough risk capital, perhaps you can start playing that and looking to average down if there is a pullback. If you really are lower risk and looking for that trade, maybe waiting to next week, but knowing that you're going to take some profitability perhaps off the table and some of the upside if it does break higher.
We're in a very high risk environment right now. So if you look at the implied volatility levels, Bitcoin's implied volatility index, it's obviously it's extended, right? So it's lower than it was 2 weeks ago, but it's still extremely high. And these volatility levels can, at some point this year, they will compress. We don't know if that's going to be next month or not. And there's a chance Bitcoin can make the move without you. So that's where you kind of have to weigh the risk reward of like, okay, if this thing goes to 80, 100K without me and implied volatility doesn't take any breaks, are you okay with having no exposure and waiting for that washout in implied volatility to come in the second half of the year? You have to know that inevitably that will come. Like if we see, say this options expiry is ultimately bearish, we drop down to 60K, bearish chop down to 50K through the second quarter, then you'll have some really juicy entries at like 80K calls expiring in June, September, December. And you don't want to put all of your risk capital into this trade now when implied volatility is so high, knowing that you could miss that fat pitch opportunity in the second half of this year. So it's understanding that there will be better opportunities, better entry points at some point this year, but it could also accelerate much faster than you anticipate in the near term. So having a plan for both. And I think a little bit of exposure isn't a bad idea. Not that you want to shove all of your risk capital into it now, but I think there's an increased probability of a high volatility move in April, one direction or the other. And I like trading volatility, so I'm okay with taking a bit larger risk here. And I think the miners are also an excellent way to play it because they've been consolidating for so long. Like if we look at let's just look at the 1 year chart, right? So their implied volatilities are so low because they've been in this kind of downward chop momentum. But if Bitcoin breaks out, these things are going to fly. It's just kind of the nature of miners is they follow Bitcoin's moves in an exaggerated format. I think Mara looks pretty good. I think Wolf looks pretty good. You look at these breakouts. I mean, especially Wolf. You look at this 5 year chart. It's crazy. This volume shelf of consolidation it's had here. It looks like it just wants to go straight to $10. And the options are not priced for that. So you find those weird mispricings in options sometimes. I think this has like 20% short interest as well. So there's a whole lot of price suppression going on right now. And if Bitcoin breaks out, I think these miners will fly along with it. And the cost of options on these are so much lower than the cost of Bitcoin options that I think it's worth a flyer. All
right. Well, there you have it. If you've got questions about whether to trade before or after this weekend, if you're thinking about whether or not you how to go into Q2, when I looked at the options this morning, the option, I guess it wasn't the option chain, it was a summary on Deribit. Notional value, open market, open interest is much lower than what we're seeing right now, kind of highlighting what we talked about earlier in the conversation, just about the amount of record open interest as well as notional value. So I think as we move into Q2, we'll start to get a better picture of what that looks like, but definitely some interesting plays that people can look at for their own portfolio. All right, Benjamin, I want to come back to you. We're going to end this show talking a little bit about your favorite, which is the alternative universe. So I asked you before we started talking about options with JJ, to think a little bit more about base. The question coming in about, say, how do you get exposure to base? Is that even something that is it more like Rollbit, or is it a little bit more like Ethereum? Talking about the flavor of what that play is like. And then obviously the ETH BTC chart. I think there's a lot of chatter online about the fact that ETH BTC hasn't yet broken down, and the expectation that may be happening sometime in Q2. Maybe you could start by answering that. What is your expectation for ETH BTC? Do you expect that breakdown? When might you expect that to happen? Or perhaps maybe it doesn't happen. Maybe you're being open to the fact that maybe it doesn't.
ETH BTC. That's very tricky to say when that flip will happen. I think it's going to take quite some time. I think ETH is trying to find a footing with a lot of this FUD that's going on. But Base is a different game. Base is not a gambling play. Base is an infrastructure play. So Base is based on the overall thesis that right now, for a company that is basically listed in a stock exchange, has found a way, apart from MSTR and the mining stocks in the States, apart from those, this is one of the first companies which has found a way to operate a decentralized platform, capture revenue, and still account it in their books and get a higher valuation of their books, which in turn will push up their stock price. So there is huge incentive here for this layer to be pushed up, like to get it through everyone's throats, to motivate people to build on Base, which is what the name is as well. It's a huge narrative, huge use case. Base to me reminds like Polygon from the last cycle, when everyone was getting incentivized. Literally, so many grants were running around. Everyone was building on top of it. There's so many projects that were shipping out, so many NFT projects. Like, I can't remember a single narrative that did not exist on Polygon chain at that point. I see Base as something like that in this cycle. So I wouldn't even compare it to Solana. I would compare it to Polygon. And Polygon has kind of taken the pedal off, from the accelerator. So I think that's why Base can be a very good narrative in the cycle.
Okay, so good framing, I think, for Base, something that the audience can take into their perspective. As you said, not necessarily gambling; it's an infrastructure play, and this is a unique one. As you just said, that it's the first that's aligned with a public company that's figured out a model to be able to grow this. So how does one think about getting exposure to this? You just mentioned that Coinbase isn't going to be listing a token. Obviously, there's meme coins that have already been listed on it. There's some of the financial protocols. How does someone start to think about getting exposure to Base if that's of interest to them?
There are some tokens, for example, I think Aerodrome Finance and some of those small projects, with some decentralized exchanges that are popping up on top of Base protocol. Sorry, not Base protocol, built on Base, because there is a separate project called Base protocol, which has a Base token, so I don't want to mention that. But by default, you keep thinking in this way. But typically, the gas fees being too low, quite low, is a huge advantage on Base layer. I think that's why I'm putting it at par with Polygon. And there's a lot of projects coming up out there, and not much of information is readily available. I think there is some decentralized AI projects that's coming up over there. Farcaster basically built a layer on top of Base as well. So there's quite some activity already going on. So this cycle, we'll see a lot of vaporware as well that comes out over there.
So you don't have a specific perspective right now on specific tokens or projects that are being launched there. Mostly that you see, I guess one area to think about would just be Coinbase as an equity, right? Assuming that you're able to see their revenues jump up because of the activity on Base.
Yeah, exactly. If you're able to, look, this is so beautiful, right? Instead of having, so right now, for users to come and onboard into Coinbase and trade and generate revenue for Coinbase is a painful task. Non-US users, it's very difficult to onboard. so much compliance is required, right?
Yep.
And that's a huge difficulty for Coinbase when it comes to scaling their revenues. The secondary revenues, or let's say their primary revenues, which comes from institutional side, which they simply don't have any other competition, and they already captured 7 out of 9 ETFs. So what more to do over there? Where else are you going to scale? And Ethereum staking is already in court, so there is nothing much you can do over there. And you cannot launch your own Coinbase as a token because you are now a stock product. So how else are you going to scale your revenue? Wherein compliance might not be a big problem. Well, you just go and push out a L2 on top of another chain, and basically the other chain is able to benefit as a result. Ethereum is benefiting as a result, and you have already said that you're not going to push out any token. You're pushing out a layer 2 because you believe a layer 2 is a way to scale Ethereum, and that puts out a noble thesis. But underlying the truth is that now you have opened doors to generate revenue into a compliant product, into a compliant platform, or a company, wherein you have a product which doesn't require compliance, and that is generating a load of revenue, and that will continue to generate a load of revenue because now you are turning all of your retail-oriented products as well to reflect that base layer will be your entry layer when you come in. If you're buying, let's say, if you are buying crypto on Coinbase and let's say Ethereum on Coinbase, and if they decide to make base as the primary layer of ETH basically getting settled into your wallet instead of mainnet, imagine the amount of fees generation that this will keep doing.
Yeah.
Right?
And we've already seen some conversation about that, just about the fee revenue that's being generated on base. I haven't read the latest 10K or quarterly coming out from Coinbase. My sense is that the analysts that are following them won't really understand the impact of base for Coinbase because there's just for some reason there seems to be some kind of a misunderstanding from TradFI analysts going into equity stocks for crypto. So this could be a very interesting play, at least for the first couple of quarters of this year, if they're able to outperform expectations.
Yeah, I mean, so far since July, they've done 192 million, but we had Solana outshadow for nearly 3-4 months in terms of activity, and there has been a cry of thought from a lot of users. And I mean, we need something on Ethereum, right? Because there's still a lot of maxis who basically sit here, and they obviously don't want to go to Solana because building dApps on Solana is a different hybrid. It's a different pedigree of developers.
Yeah.
It's not the same set of developers who are able to do it, right? And if you go for node providers, if you go for all of that facilities that already exist on EVM chains, so that is why there is a bit of an entry barrier when it comes to building on Solana. That's why people are still craving for something on Ethereum itself. It's not because of any social attachment. It's more because it's easier to get access to data oracles. It's easier to push out something on Ethereum chains even now. That's why. With that being the situation, like now base becomes the best narrative. And also it's a very good infrastructure. It's a pain to bridge to base and bridge out of base. It takes a lot of time. But exchanges have already integrated base mainnet. So you can already move money from base mainnet into all these from exchanges to these base mainnet in a fraction of a second, and it works seamlessly. So all the more
reason to be positive. Okay, so just to summarize here, I think base could be a catalyst for Coinbase from an equity perspective. There's obviously a lot of projects that are on base, more that will be launched. Nothing specific that we talked about today to go have a look at, but I'm sure for all those listeners out there saying, what are specific options on base to be playing, we'll be bringing Benjamin back to talk more about these, whether or not they're more of an infrastructure play or more of a degen play. And with that, we're going to wrap up today's show. I want to thank Benjamin, JJ for being here. Great to hear all the alpha you guys dropped, especially JJ stuck on Joker. Everyone out there, thanks for joining us. We appreciate having every single one of you. Definitely join us again next week. Again, we're here every Tuesday and Thursday to break down the markets, give you ideas for plays for your own portfolio. And I will, as I always do, give you the same PSA. Always keep some dry powder for the next opportunity the market gives you. This is Marconi White signing off.